Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 7th of March 2018. I'm Darren Sinden and you can follow me on Twitter throughout the day by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. A relatively quiet session on the world's exchanges again yesterday. I do just want to flag a few interesting and perhaps contradictory points. First of all, dollar yen. The yen appreciating further against the US dollar yesterday, making gains of around 0.49%. But the dollar made ground against other large exporters. Dollar CAD, US dollar, Mexican peso and Korean won here are the currencies I flagged. So two sets of conflicting forces really driving the yen and the Canadian dollar, Mexican peso and Korean won against the dollar. We're going to look a bit more at trade and the implications of developments in Washington as we go through the video. Right, what's on the calendar? Events that may move the markets today. A pretty compact but at the same time busy calendar, so let's crack on and look at what data we've had so far. Earlier this morning we had GDP data for Q4 out of Australia. We'll come to that momentarily, but this was referenced in yesterday's RBA interest rate decision. We've also had the first of the day's central banker speeches, this time at 1:30 GMT from FOMC member Kaplan. We also saw out of Japan at 5 AM GMT leading index and coincident index data for January. Figures are here. I will look at that again in a bit more detail momentarily. To come then, 10 o'clock GMT, GDP for the whole of the Eurozone for Q4 2017, both on a year-on-year and Q4 quarter-on-quarter basis. At 1300, the second of the day's central banker speeches, from this one from FOMC member Bostic. 13:15, unemployment data out of the States, the ADP employment change for February. Obviously this data takes on significance as we have non-farm payrolls at the end of the week. Housing starts from Canada also released for February at that point in time, and then at 13:20 the Fed's William Dudley will speak, giving us our third central bank speech of the day. 10 minutes after Mr. Dudley takes to his feet, we'll have trade balance, non-farm productivity and unit labour cost data out of the US. That'll be followed by international merchandise trade data for January out of Canada. But staying in Canada, and perhaps the most important decision of the day, the Bank of Canada's interest rate decision for the month of March, due up at 1500 GMT. 2000 GMT sees US consumer credit changes for January, and 2350 will see foreign investment in bonds and stocks for Japan for the week of March the 2nd. Okay then, breaking news and comment that's caught my eye overnight, and the focus would have once again seemed to be on Washington. Gary Cohn, the chief economic advisor to President Trump, has quit the White House in protest over the imposition of trade tariffs. Asian equities initially fell on that news. Meanwhile, President Trump's son-in-law, Jared Kushner, is to visit Mexico to try and restart talks with Enrique Pena Nieto, Mexico's president, after a very fraught 50-minute phone call with President Trump yesterday ended in stalemate and gridlock. And as we saw, Australian Q4 27 GDP has undershot forecasts, coming in at 2.4% versus an expectation of 2.5%, and Japan's leading and coincident indices data also fall short. Both of these data items will give their respective central banks pause for thought. The Reserve Bank of Australia, of course, is waiting for the economy to improve before it considers raising rates. Japan, of course, is in the midst of a massive QQE program and still trying to get the economy ticking over on all cylinders. Right, food for thought then, something for you to take away with you into the trading day and beyond. And we'll stay with trade. Global trade and the US influence is very much in the headlines again, as we've just seen. But recent research by the IMF has found that the US currency can have a positive effect on global trade flows. And here's a soundbite from a recent IMF report. During 2017, the US dollar depreciated by some -7% against a basket of other currencies, as global trade flows surged by 4.5%, say the IMF. They draw a direct correlation between those two events, thus creating a two-way pull between tariffs, which are obviously negative for trade, and a weaker US dollar, which is positive for trade. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks, then please do contact your Pepperstone account representative.